Good morning, trading world. It is July 1st, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. We have reached the first of the month, and you know what that means. New fund flows to money managers. All that money that has been automatically deducted from paychecks gets released to fund managers to get put to work starting today. For the longest time, I used to take my keys from the bond market. If the bond market was on the bid and had a high volume pre-market, that was a sign that the equity market was not going to do well. And if the bonds were down with low volume, it was a sign that the equity market would do well that day. I haven't talked about or used this key much since the Fed went cowboy crazy, tying up and buying up bond products, manipulating rates to stay low. Since the tightening of the balance sheet and rate hikes, bonds are making a comeback. Bonds are no longer unattractive pieces of paper. Money managers are starting to have a choice again on where to put money for gains. You're probably wondering what it has to do with today's market. Well, in recent years, when new fund flows hit, it was about guaranteed that that money was headed straight to the equity market. Where else were you going to put money in hopes of a decent return? Because of the Fed and manipulated low bond yields, it caused everybody, even people who didn't mess with the equity market, like your grandma who always talked about putting money in the CD or hiding money under the bed. It even forced those people to join in the equity market, to have to hunt stocks in that equity market in hopes of some type of return on their money. So for the last few years of this Fed-induced bull bubble, the first through third was always bullish, making most people forget the natural order of things. Because we are traders, we get caught up in always looking at the indexes or key stocks to gauge the overall market. But in fact, the last few years, it's been the tail wagging the dog. And we have forgotten which one is the dog. The equity market is the small tail that takes its keys and scraps from the bond market, and not the other way around, as it has been in this Fed-induced bizarro world for the last, I don't know how long. In 2016, this is the best info I could find on short notice, but the bond market had a notional value of $92.2 trillion, and the U.S. accounts for about 43% of that. In comparison to the equity market is only $70.1 trillion, with the U.S. accounting for 39% of that. So you see, bonds are back, and the first through third isn't going to be as easy to navigate as it has been. With that, let me bring up the key levels of the day. All right, here we are back with the key levels of the day. Starting on the resistance side, We have our jack resistance at the 376 to the 377 area. Then we have our queen resistance at 378 to the 380 area. This area is going to be important today. If we get any semblance of a rally today, I kind of expect it to sizzle out around this 380 area. Reason being, this is the bottom edge of the market maker's expected move. So I do see a rally happening, but I see it also fizzling out right here at that level. Then we have the king resistance area, 381 to the 386 area. On the support side, we have our jack support at 375 to the 374 area. Then we have queen support, 373 to the 372 area. And then our king support, 371 to the 368 area. And actually, I want to make a note we actually have a little leeway to make it all the way down to the 365 area. And being 365, if we make it to 365, we might as well say 364, because that's the bottom of the range or the channel that we're in. The major channel is 364. All right. The main thesis for today is bearish, closing below the 377.25 with a projected target low of between 372 and 366. Again, I'm going to amend that and say it's possible to make it all the way down to the 364 level. The alternate thesis is bullish, closing above the 377.25 with a projected target high between 378 and 386. The current channel we are in is 379 down to 364. And the next major channel below is going to be 364 all the way down to 353. Now let's bring up the scenarios of the day. All right, here we go with the first and most probable scenario. It's our expanded range structure. We could look to set a decision area low boundary around the jack or queen support before chopping back and forth and pushing both the high and lower boundary for the day. So kind of have it looking like a pretty much a V bottom at some point in the middle of the day. So we get our push up and run into resistance, fall back, push our lower boundary, and then take off, heading back up and pushing the higher boundary and leveling out, going into the close. Again, remember that 380, it's going to be pretty much where things get really hard. I don't see us pushing much past that 380 today, because there's a lot going on at that level. So in the morning we push up, probably just do enough to get either to or just past the previous close before we reverse and search out lows for the day. So that's the first scenario. And let's bring up the second scenario. All right. The second scenario is basically a small rendition of what happened yesterday. It's our trend day down structure. We open gap down, start with a pop back up toward the previous close. We find resistance on or before that previous close, then begin the downtrend for the morning. We find midday chop around either the possible queen or king support area. Starting off at one point this morning, the gap was big enough to where it could make that first pop back up feel almost like a trend up day. But again, just like yesterday, if we don't close above the previous close represented by that blue line, it is still a downtrend day. And so you have to be careful with how you look and proceed from there. That's pretty much it on the downtrend day structure. I will be keeping an eye on the close because it's going to be interesting to me on how we go into the close. Whether we get an extreme up, a lot of short covering, and looking at where internals are to where some of that can kind of continue into Monday, because I am looking for at some point a rally to begin off of some short covering, off of a big short covering rally, and it kind of sparks and rolls and snowballs into something bigger, and we get another bear market rally. Was looking for that to start today, but there's some signs that the market isn't quite right, and looking at the bonds start to take off for the moon kind of tells me that we're in for some heavy sell side activity at some point today. Yeah, so keeping my eye on the bonds in the corner of my eye. Like we just got some activity and they took off toward the moon. So that is going to play out with some sell side activity at some point in the equity market. All right, time to bring up the last scenario. All right, the last scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack and queen support area and find midday chop around either the queen or king support area before spending the same amount of energy we use coming down to go back up the second half of the day. Beware, as always, on the rounded reversal, we do have a vice versa warning, and that vice versa says we could do something like this. We get a continued push up first toward that queen support area, queen resistance area, and chop around that 380, and then get our push lower the second half of the day with the same type of energy we had pushing up toward that 380. So those are the scenarios of the day. Again, be very, very careful. Understand your risk. Know what you have at risk, because the most important part of being a trader is, to me, understanding your risk and protecting the capital that you already have. Right now is a very important time because, like I said, I'm looking for a short covering rally to kind of spark a bear market rally. But we're kind of at a junction where we could get that rally and we could take off to something bigger, or we could come up a little bit with the short covering and roll over into something a lot deeper and darker. So today and Tuesday, really next week, is going to have that telltale of where or what direction we start to go in, whether we start the rally or we start to go down the deeper, darker path. So that's the pre-market for today. I hope this helps. And as always, wishing you a positive trading day. Have a great one.